Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, the May series has started on the back foot clearly, given the fact that the Nifty saw a triple-digit cut, Yatin, today, but we managed to hold on to that 22,400 mark. So 150-point cut coming in on the index. Sensex as well, gave up that 74,000 mark. In fact, 600-point drop on the Sensex. But the good part is that the breadth is evenly distributed between gainers and losers, and the broader end of the markets continues its outperformance. So today, the Nifty mid-cap index managed to hit a fresh high. The small caps were also in fine fettle. It was the same story yesterday as well. We saw both the mid and small caps outperforming the benchmarks, for the week as well, Yatin, although we slipped a bit today, for the week both the Nifty and Sensex are up 1%, but the mid cap index in particular is up 4% for the week, Yatin. Aside of that, if you look at today's action, realty and IT were among the top gainers. Of course, IT sector was being supported by strong gains in Tech Mahindra. At one point the stock rallied 13% but ended with gains of somewhere around 7% or thereabouts. Aside of that, what didn't do well was autos and banks. Autos, of course, ahead of Maruti's numbers. We saw Maruti also trade in the red for the most part of the day. Banks also among laggards today. And, on the benchmarks, if you see the individual movers, Tech Mahindra, as I mentioned, was the top Nifty gainer. Divi's Lab was, in fine fettle for the week as well. I think Divi's Lab has surged, Yatin, somewhere around 8 to 10%. Aside of that, Bajaj Auto, BPCL, Coal India, these were among the top performers today. On the losing end, of course, Bajaj Finance reacting to its numbers, and what the street has to say about the stock after the numbers. We'll be talking about that in details. Bajaj Finserv numbers came out. I think the stock was still among the top Nifty losers. Both the Bajaj twins were sulking in trade. IndusInd Bank, despite good set of numbers, the stock was in the red. Nestle and M&M were some of the other losers. But in the broader end of the markets, there were quite a few movers and shakers, Yatin, particularly L&T Tech. I think on one hand you had Tech Mahindra outperforming, but mid-cap IT, L&T Tech, because of earnings disappointment, was among the losers. Yeah, and
obviously the mid-cap end of the market was not impacted by the broader market 3-digit cut. In fact, the mid-cap index rose nearly 0.8%, and the small cap index was up 0.5%, and that is reflective of the advance decline ratio on the NSE, which was almost 1:1 despite the weak market condition. Now, if you look at the top gainers on the Nifty 500, we had stocks like Hutco that moved nearly 12%. Zensar Technologies, after a good set of numbers, that stock moved 8%. New India Assurance, Westlife, Engineers India, GMR Infra. Remember that is one of the top gainers in F&O space, doing well. PSUs like Concor also were gaining by nearly 6%. What was not doing well is the likes of LTTS. The results disappointed, the guidance disappointed, and this is a typical niche company which is into spaces to that of companies like Tata Elxsi and Tata Technologies. So watch out for this space. There is some pressure with respect to the overall business prospects versus the market expectations. Obviously, Catholic Syrian Bank, KSB Pumps, these are the other stocks which were languishing in trade. We also had stocks like Olectra, Tanla Solutions, IndusInd Bank reacting to the earnings as well as news which were there in the market, and some bit of profit taking in few of these mid-cap names.
Right, of course, those were all the movers and shakers in the mid-cap end of the markets. But on that note, let's take a look at the stocks that are on our radar this afternoon, starting with Bajaj Finance, Yatin, top Nifty loser. 8% cut coming in on this stock. Of course, the two main reasons behind the earnings disappointment, so to say, was the rural loan losses as well as RBI's restrictions on two of its lending products. Of course, if you look at what analysts have to say, they have pointed out that the removal of restrictions by the RBI will be the catalyst for the stock going forward. But the company has also said that it has complied with RBI's directions, and it has formally requested the RBI to review its restrictions that it has imposed. Both return on asset and return on equity, dropped in the fourth quarter, Yatin, both on a quarter-on-quarter basis and YOY basis. But let's take a look at what the street is saying. The street is largely divided on the stock, Yatin. Macquarie has maintained its neutral rating, target price of 8,100. It says that the company is moving towards normalized earnings growth, but growth and ROA both will see some decline going forward, and FY25, it could be a year of challenges for Bajaj Finance. Margins of course came under pressure, and credit costs were also elevated, Yatin, another cause for disappointment. But it's the secured segments, according to Macquarie, that will drive growth for Bajaj Finance. Profit, according to Macquarie, was in line, and contingent buffers continue to decline. That's what Macquarie has pointed out. Citi also has a buy rating. Target price has been cut to 8,675. The 30 to 40 basis point margin moderation that the company has guided for in H1 FY25, that also came as a disappointment. But Citi has pointed out that the guidance assumes lifting of restrictions on the two products by RBI in the near future, but it has cut earnings estimates by 7% each for FY25 and FY26. JP Morgan, of course, overweight rating, regulatory restrictions impacted earnings. It has noted that, but of course the near-term catalyst, once again, according to this brokerage is removal of the digital ban. But it's Motilal Oswal that has downgraded the stock. It has said that until and unless the ban is lifted, FY25 will be a challenging year for Bajaj Finance. But Yatin, interesting point is, if 33 analysts are tracking this stock, out of that 21 still have a strong buy call on this stock. Although just looking at fund action in the last quarter, both domestic and foreign investors have paid their stake in the stock.
Yeah, and a lot of issues with respect to RBI, and then now the growth. Most importantly, the company's guidance was also lower in terms of NIMs being under pressure by 30 to 40 basis points, and that didn't augur well for the stock. But also languishing in trade was Laurus Laboratories, and this stock never surprises to give a negative surprise. Last 3-4 quarters have been painful, and so is the case with the exit quarter. The guidance also indicates that despite the EBITDA margins moving higher, we could have a flat year for revenues. Jefferies has an underperformer call on Laurus Laboratories with a target price of 250. Obviously it is much lower than the current market price. Now Jefferies believes that a weak quarter for CDMO has led to a overall weak performance. Most importantly, the company has failed to provide more color on the animal healthcare and agrochemical CDMO contracts, because from here on how will the ramp up happen is something that analysts are not sure about. Management, however, believes that the animal health and agrochemical CDMO contracts will scale up only beyond FY26. So FY25 no real fireworks are expected from the segment. In fact, Jefferies has cut FY25 EPS estimates by 15% on lower CDMO sales. So this is one stock, probably scale up happens a year later, but FY25 probably could be wash out.
Well, Laurus Labs is clearly languishing on the back of weak earnings, and of course that was clearly reflecting in the stock price. In fact,
it was a gap down, and the stock
it tried to recover, I think.
And Nandita, today if you look at pharma stocks, Biocon, Dr. Reddy's, Aurobindo,
well,
in general there was buying in defensive companies. But if you look at Laurus post the results yesterday, it went down, opened with a gap down, and somewhat recovery on the hopes that probably a year later scale up will happen, but still the stock has not been able to perform like other pharma stocks.
Right. Well, that was about the Pharma Pack and Laurus Labs in particular, but let's also talk about Tech Mahindra. Of course, this was the top Nifty gainer. In fact, pushed the IT stocks, IT index higher as well. Of course, we also are waiting for HCL Tech numbers that will be coming out later today. But Tech Mahindra, it rallied as much as 13% at one point in time, but of course came off days highs and ended high by about 7.5% or thereabouts. Street has cheered the new CEO, Mohit Joshi's FY27 vision more than the numbers. Numbers were largely in line. Yatin, wasn't such a big disappointment because margins saw steady inline kind of growth, and even profits were up 30% on a quarter-on-quarter basis. Even the CC revenue growth declined much lesser than what the CNBC poll was throwing up. So the CEO has outlined the vision for FY27. He has said that he will bring the company back to industry leading growth in 3 years. In fact, aiming for a margin growth of 15% over the next 3 years. So this is something that the street cheered. We saw the reflection in stock prices as well. But brokerages have pointed out that it's the execution that will matter going forward. Of course, it is a sensible target that has been set out by Tech Mahindra according to some brokerages, but there will be challenges in attaining this target given the fact that the external environment remains weak, right? There's no improvement in consumer discretionary demand, and that has of course played out on other IT giants numbers as well. So CLSA, most of them have kept their faith in the stock. CLSA has a buy rating, target price at 1589 rupees per share, and it says that the targets set out by the management is set in stone, and of course they'll be watching out for whether or not they manage to meet that target or not. They've cut the EBIT margin and EPS estimates by 13 and 12% for FY25 and FY26. HSBC on the other hand has a hold rating, target price at 1300 rupees. They've pointed out that the new turnaround plan is sensible, but of course it's execution that they'll be watching out for, and the margin expansion will be highly contingent on pyramid improvement. Jeffries as well, underperform rating, target has been cut to 1065, and it has pointed out that the weak order book and headcount decline is pointing to weak growth outlook, and they've cut estimates by 4 to 9% on growth and margins for FY26 to FY27. While the restructuring efforts are in the right direction and FY27 strategy is in place, investors will of course wait for how they really carry out the execution. Of course, last 6 months saw good gains for some of these IT names like Tech Mahindra, but ever since global giants like Accenture started cutting their guidance and giving weak outlook, we saw all of these IT names coming under pressure.
Yes, and there was a meme in the market today wherein Tech Mahindra's profits were down 10% and Bajaj Finance's profits were up 20%. And both the stocks were inversely related. So it was something that the street was laughing about today. But yes, Tech Mahindra, the stock there on your screen, 7% higher, ending the day almost near the day's high.
Well, those are all the stocks that were on our radar this afternoon. Of course, Monday we'll be reacting to quite a few earnings. Yatin, Maruti, HCL Tech and ICICI Bank that comes out tomorrow. Yes. So Monday, of course, will be action packed, and of course we are in the thick of earnings season. Lots of earnings to watch out for next week as well. But with that, we've come to the end of the show and we've come to the end of the week as well. So you guys have a great weekend, and of course come back and join us on Monday morning, back with the market live at 9 a.m. So from me and Yatin for now, goodbye. Thanks a lot for watching.